Alright guys, what I'm going to show you now is how to prevent losing by using a footprint. So one way that people can get trapped on trades, and you want to look at how do you identify when this trap's coming, where you could get yourself caught short and then at the mercy of the market scrambling back up against you, running away from you, trapping you short, and often leaving traders with much bigger losses than they would have expected on any one trade. And it all comes down to not understanding the obvious. You look at this example and you can see that there's an obvious absorption. Somebody is buying significant amounts at the lows and they're sitting there just stopping the market going down. But that doesn't mean that being short you're going to lose money necessarily. The market could continue onwards. Where you're going to lose money is in not recognizing that point where the turn's going to come from. That point where suddenly market bouncing back against you is going to accelerate against you. That's what you don't want to get trapped on. And this is all about recognizing where the market is running out of buyers on bounces. Because the moment that you get a turn there, the moment that buyers do take control and they start buying at that point, that's when the reversal is coming. And because of the fact that everybody else selling is all short, waiting for the move down, they're trapped. You're part of that trap. And if you're not using the footprint to pinpoint that turning, that little pivot, if you don't have a footprint to highlight that for you, you're going to miss out. As the market turns, you're not going to be aware of it, and before you're aware of it, you're an extra 10, 15, 20 ticks offside. So that's all well and good. You can identify that area where the turn's coming from. You identify that sudden pickup of buying power at the turning point, and that's what gives the scramble up. Great. So you've worked out how to not lose. One simple method using a footprint. But what you need to really do as a trader is to then recognize how you can turn that into a winning trade. This is the kind of thing that we do in combining tools. Because a footprint's not going to make this a winning trade entirely for you. Order flow is. Understanding the price adder in combination with a footprint is where you're going to get paid, where you can turn this into a winning trade. This is the kind of thing we bring in week 3 of the career course. How to combine order flow and footprints together to make a trade. Because if you can see that in the order flow, you can execute really accurately. The footprint shows you where to do it. The order flow that you see from a price adder says to you, now you want to do it. You get into that trade, and rather than being one of the people trapped, one of the people without that information from a footprint, without that information from an order flow, rather than being one of those people, you're actually taking advantage of it. You're getting in for that quick move up. And so now, not only have you saved yourself from losing, you're now taking advantage and you're making money out of a very simple recognition of a footprint setup, using an absorption, but recognizing the pivot where buyers will take control. The moment they take control, there's your opportunity. Order flow is going to show you that on your DOM. Right, so you've just seen one way that you can stop losing using the footprint and then also turn this into a winning trade. If you want to see other footprint strategies, you want to see other order flow strategies, check out the link, come and join an upcoming workshop. I'll be showing you how you can use footprint to identify breakout trades, use footprint to identify false breaks, and then also how you can use a price adder or a DOM in order to leverage your positions up, build up your size so you can really take advantage of those footprint identification setups that give you that opportunity to trade it on a ladder.